A certain hot topic has emerged in the US amidst the economic downturn that is currently going on in the country. Analysts and people fear that another housing market crash like 2008 is on the way. But the real question is, will the US housing market survive this crash?
Then the housing prices collapsed, the mortgages couldn't be paid, and the banks essentially became insolvent.
Signs of cracks, warning signals in the housing sector. You've probably heard whispers about the housing market showing some cracks. But what are these warning signals? Rising inventory where unsold homes are stacking up is a clear red flag. It hints that buyers might be hesitating due to skyrocketing prices. In the past 2 years, sales have significantly increased in the housing sector, causing a price appreciation. But due to a surge in mortgage rates, the housing market has observed a downshift since last summer. Interest rates are double now than what it was in 2020 and 2021. Not just that, there is a sharp downturn in buyer demand causing ups and downs in home prices. All these factors raise red flags that we might be witnessing a housing crash soon. Flashbacks of 2008's Great Recession. Flashback to 2008 when the housing market experienced a massive crash due to the subprime mortgage crisis. Lenders were giving out risky loans, and when those loans went south, the entire market suffered. Since then, regulatory precautions have been put in place to prevent a repeat of that disaster. These policies have contributed to a more stable basis for the housing market. The big question is whether these policies are sufficient to withstand another crash. Unpredictable market trend. Since 2022, fast forward to today. The U.S. housing market has been on the low since late 2022, causing mass layoffs in mortgage companies. Despite mortgage rates doubling and home prices soaring by over 40%, a severe downturn hasn't materialized. Home buyers have been waiting for a better deal, yet the prices keep climbing higher. This one-of-a-kind scenario has resulted in a market with unprecedented supply constraints. Warren Buffett's investment choices. In this alarming situation, the investing guru Warren Buffett has surprisingly been active. He's known for his careful moves and long-term strategies. In a move that surprised many, Berkshire Hathaway, the conglomerate led by Buffett, disclosed new investments in 3 major home builders: D.R. Horton, Lennar, and NVR. These investments were revealed in a regulatory filing that detailed Berkshire's U.S.-listed stock holdings as of June 30th. These investments were made during the second quarter, a period when Berkshire's home building and remodeling businesses experienced a slowdown due to rising interest and mortgage rates. However, it's important to note that the effects of this slowdown were partly offset by new construction activity resulting from the low inventory of existing homes for sale. This dynamic environment raised the potential for benefits to home builders. As of June 30th, Berkshire's holdings included approximately 5.97 million D.R. Horton shares valued at $726.4 million, around 153,000 Lennar shares valued at $17.2 million, and 11,112 NVR shares valued at $70.6 million. Why would Buffett invest in housing during a supposed bubble? Buffett's interest in the housing market is nothing new. For years, the corporation has been carefully investing in the sector. Berkshire Hathaway owns Clayton Homes, which is a key player in the home building sector. With existing home sales experiencing a steady decline, Buffett's purchase of 1.25 million LPX shares signals his belief that the housing market has potentially reached its lowest point. As housing inventory gradually increases, it hints at renewed confidence from both buyers and builders in the market. Berkshire's sizable stake of 7% in Louisiana Pacific Corp., valued at $417.1 million, is a strong indication that Buffett sees inherent value and growth potential in the company, especially as the housing market begins to recover. Buffett's approach to investing is based on long-term trends and the intrinsic worth of companies that are well-positioned to profit from them. Buffett's track record of long-term success has earned him the moniker of investment legend. His most recent bet on the housing market carries weight, implying that he sees not only future development in the industry, but also a positive trajectory for the economy as a whole. What realtors and economists have to say? Many real estate economists have labeled it as a housing recession. Some experts believe that the current situation isn't necessarily a bubble. They argue that factors like demographics, housing shortages, and population growth could keep the market afloat. Others, however, urge caution. They point to the rapid price increases and the possibility of economic shifts that could destabilize the market. Selma Hepp, deputy chief economist at CoreLogic, emphasizes that the current housing market is grappling with a perfect storm of factors. High mortgage rates, along with inflated home values and lower buyer demand, are painting a challenging picture. The looming presence of a potential recession adds to the complexity. Housing economists are echoing the concerns about potential price declines, but they offer a balanced perspective. While prices could indeed slide further, the decline is unlikely to mirror the severity of the Great Recession. This distinction is crucial, and the reasons are manifold. One major distinction between the past and present is the financial strength of today's homeowners. Unlike 15 years ago, homeowners today boast robust credit scores, substantial home equity, and fixed-rate mortgages secured at rates comfortably below 5%. This reality has created a buffer against extreme volatility. Interestingly, a June Redfin study found that an impressive 82.4% of current homeowners are locked into mortgage rates below the 5% mark. This statistic underscores the stability and resilience that current homeowners possess in comparison to homeowners during the Great Recession. Apart from the economists' perspectives, builders are playing a pivotal role in shaping the market's trajectory. The Great Recession is vivid in their thoughts, and they've taken a cautious approach to construction. The scars of that time have resulted in a measured pace of building new homes. This caution contrasts sharply with the pre-recession period, when uncontrolled development resulted in an oversupply of homes, worsening the market meltdown. The lessons learned from that experience have influenced builders to maintain a more balanced supply-demand equation, preventing an overextension of the market. The impact of a housing market crash. The dream of homeownership is getting harder for first-time buyers. With prices out of reach for many, the market's future depends on new entrants. If they can't afford to buy, the market could face serious trouble. A housing crash wouldn't just affect homeowners, it could send shockwaves throughout the economy. Industries tied to housing, like construction and home improvement, could suffer, leading to job losses. A home is the biggest asset for many people. A market crash could wipe out a substantial amount of personal wealth, affecting retirement plans and financial stability. Tips for buyers, sellers, and investors. If you're in the market to buy, it's crucial to be patient. Keep an eye on interest rates, explore different neighborhoods, and don't rush into a decision. For sellers, it's essential to be realistic about pricing. While it might be tempting to capitalize on high prices, an overpriced home could languish on the market. Investors should focus on the long term. Speculative buying might yield quick profits, but it also comes with risks. Diversify your portfolio and consider the potential for rental income. As we wrap up, the question remains: will the U.S. housing market survive the crash? The answer cannot be black and white yet. Surely the market is facing certain challenges, but it is also equipped with the lessons of the past. The important factor in this scenario is finding a balance between sustainable growth and avoiding pitfalls of speculative behavior. So, whether you're a potential buyer, seller, or simply interested in the economy, stay updated on the housing market's progress. Thanks for watching this video. Remember to hit that like button and subscribe for more insightful discussions. Until next time, stay informed and take care.